Hello, this is Prabhangshu Adhyapak, and I will be speaking about non-performing assets in India as a part of the course curriculum of Indian Economics and Policy. Now let's see what is non-performing assets. The assets of the banks which don't perform, that is, which don't bring any return, are called the non-performing assets or the bad loans. Now, bank assets are the loans and advances that are given to the customers. And if the customers don't pay either the interest or part of the principal or both, then the loans turn into bad loans. According to RBI, term loans on which interest or installment of principal remain overdue for a period of around 90 days from the end of a particular quarter is called a non-performing asset. However, in terms of agriculture or farm loans, the NPA is defined as something little different. So, for example, for short duration crop agricultural loans, agricultural loans such as paddy, jowar, bajra, etc., if the loan is not paid for 2 crop seasons, it would be termed as a non-performing asset. For long duration crops, however, the duration would be 1 crop season from the due date. Now let us see what are the reasons for the rise in NPA in the recent years. The first reason can be stated as GDP slowdown. Well, between the early 2000 and 2008, Indian economy were in the boom phase. During this period, banks, especially the public sector banks, lent exclusively to corporate. However, the profits of most of the corporate dwindled due to slowdown in the global economy, the ban in mining projects, and delay in environment-related permits affecting power, iron and steel sector, volatility in prices of raw material and shortage, etc. Now, this has affected their ability to pay back loans and is the most important reason behind the increase in NPA of public sector banks. There are several other reasons as well. One of the other main reason why there is an increase in NPA is a relaxed lending norms, especially for corporate honkos, when their financial status and credit rating is not analyzed properly. Also, to face competition, banks are usually selling unsecured loans, which are attributed to the level of NPAs. There are some other sectors like textile, aviation, mining, infrastructure also contributes to most of the NPA. Since most of the loan given in these sectors are by the public sector banks, they account for most of the NPA. Public sector banks provide around 80% of the credit to industries, and it is this part of the credit distribution that forms a great chunk of NPA. For example, if we consider the case of Kingfisher, that led to a huge non-performing asset. SBI provided a huge amount of loan which it was not able to recover later. So this is a common example of NPA. Now, there is a myth that main reason for the rise of NPA is the public sector banks was priority sector lending. However, according to findings of the Standing Committee on Finance, NPAs in the corporate sector are far higher than those in the priority or agricultural sector. However, even the PSL sector has contributed substantially to the NPAs. As per the latest estimates by the SBI, education loans constitute 20% of its NPAs. Now, let's take what are the steps taken by the Reserve Bank of India in the last few years in order to curb NPA. The first reason is the first step that is taken by RBI is the amendment in banking law to give more powers. The Banking Regulation Act may be amended to give RBI more powers in order to monitor bank accounts of big defaulters. The amendment in the banking law will enable setting up of a committee to oversee companies that have been the largest defaulters of loans. RBI wants stricter rules for joint lenders forums and the oversight committee to curb NPAs. The second step that can be taken is the stringent NPA recovery rules. The government has over the years enacted and tweaked stringent rules to recover assets of defaulters. The Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act of SARFAESI Act of 2002 was amended in 2016, as it took bank years to recover the assets. RBI's loan restructuring schemes can also be considered as another step. RBI has over the past few decades come up with a number of schemes such as corporate debt restructuring, formation of joint lenders forum, flexible structuring for long-term project loans to infrastructure, strategic debt restructuring, scheme and sustainable structuring of stressed assets to check the menace of NPAs. Now, what is the present scenario of NPA? According to the latest information collated by the government, stressed assets, which includes both non-performing assets as well as restructured loans of bank, stood at rupees 9.64 lakh crore. RBI's Financial Stability Report said that gross non-performing advances ratio of all banks increased to 9.1% by September 2016 from 7.8% in March 2016. So the amount of stretched loans was up to 12.3% of total loan given out by banks by September, up from 11.5% in March 2016. Now the question is, what next? Driven by the strengthening economy and pushed by the government, regulators, banks and capital providers, we expect the bad loan situation to be significantly mitigated by 2019. The economy can then look forward to a fresh capital expenditure cycle. Coupled with strong consumption and savings, continued seminal reforms like the goods and services taxes, and aided by continued trend of global capital flows, it can be expected to see the Indian economy firing on all cylinders in the next few years. Thank you.